This is the Prometheus Market Insight video update for September 21st, 2013. I am Eric McCurdy, Senior Market Technician at PMI. We begin today with short-term cycle analysis for the S&P 500 index. Now on Friday, a cycle high setup was generated by our computer models, indicating that the alpha high of the current short-term cycle may have formed on September 19. A subsequent close below 1704 on the S&P 500 index during the next session would generate a confirmed cycle high signal, indicating that the alpha phase decline of the current cycle is likely in progress. Moving to short-term technical analysis, you can see the support level at the lower boundary of the uptrend that began in late 2012 is right here in green. Now note that every move since the low in April has been an extreme violent move, essentially straight up, straight down, straight up, straight down, and straight up once again. Now when this type of market behavior occurs in the final phase of a cyclical uptrend, it usually indicates speculative exhaustion, meaning that the rally is losing strength and a significant turn could occur at any time. Moving out to the intermediate term view, in late August our computer models indicated the likely formation of an intermediate term low, and as you can see since then the market has moved up for 3 weeks in a row, confirming that the latest intermediate term cycle low did indeed occur during the final week of August. Now note also that intermediate term cycle translation has been bullish for quite some time, since late 2011. If the current move off of the last intermediate term cycle low continues higher from here, that will reconfirm this bullish translation and favor additional intermediate term strength heading into the end of the year. However, if the stock market turns right here and the forthcoming decline moves below this last intermediate term cycle low, that would signal the likely transition to a bearish translation. And this would be a very important signal because we are likely in the final stage of the cyclical bull market that began in 2009, and the latest cyclical top is long overdue. See, this extreme move right here is typical for the speculative blow-off phase, which occurs at the end of a bull market. So if we get that intermediate term cycle translation change from bullish to bearish, that would greatly increase the likelihood that a cyclical top is forming right here, right now. Now if we take a closer look at the speculative blow-off phase of the current cyclical uptrend, you note that it is exhibiting the classical characteristics of a bubble, as defined by a log periodic equation. What happens is you have these oscillations back and forth, and then the move accelerates higher as the oscillations become shorter and shorter until the bubble bursts. Of course, it is impossible to calculate with any useful degree of statistical confidence when a bubble will burst. However, it is almost certain that when the next cyclical top forms, it will be followed by a severe decline of 30 to 50% on the S&P 500 index. Therefore, it will be very important to watch the current intermediate term cycle develop, because if we do indeed get that bearish translation change, that will signal the likely formation of the latest cyclical top and forecast substantial losses heading into next year. That concludes this video update. For more information and to receive our daily market forecasts and signals, please visit our website at www.prometheusmi.com.